Hi there, this is Justin, and we're going to explore the UK housing market, although you can make up your own mind as to whether this is applicable to your own housing market. Now, as we know, the Bank of England base rate has increased every quarter for, well, a few quarters and now stands at 5.25%. The base rate is often taken as the middle point of a spread between savings rates, which are lower than the base rate, and lending rates, which are higher than the base rates. And it's within this spread that banks typically make a significant portion of their revenue. It's also important to understand why the Bank of England has been increasing rates, and this is to tamp down inflation. Now, this is a little bit of a blunt instrument. The purpose of it is to encourage people to save rather than spend. But when interest rates increase, some things do get more expensive, and that's mainly debt. Almost everyone is in debt. Mortgage debts and car payment debt probably top the list, but of course there are things like credit card debt as well. And as interest rates increase, these things become more expensive, requiring eventually salary increases, which increase the cost of everything, and that compounds inflation again. However, this is about house prices. A couple of years ago, mortgage rates were around 1 or 2% a year, something like that, sometimes even less than 1%. Looking today at uswitch.com, the standard variable rate in the UK is 8.74%. Now, the difference between a 2% mortgage and an 8% mortgage is 300%. Mortgage payments were already pretty much top of the list of any families or individuals' monthly expenses. The issue is a lot of people haven't felt this yet, and that's because they're still on their 3- and 5-year fixed-rate mortgage deals, and they'll gradually be coming off those deals to the standard variable rate or be refixing at between 6 and 7% from their previous fix of around 1 to 1.5%. And this will put a considerable strain on many people's finances to the extent that they may not be able to meet them. Now, bank bosses have said that they have no stomach for repossessions circa 2008. And I can well believe them. They're in the business of money lending and borrowing it, and not in the business of owning 14 Acacia Close. What they will do, though, is have a meeting with somebody who's struggling to pay their mortgage and insist that they move to accommodation that's cheaper, more affordable. This will have the same effect on the housing market. Unfortunately, we do have a compounding effect, which is that self-same inflation that we had spoken about previously. Now, after 3 years of inflation, we'll have price increases of about 20 to 25% in total, which will have the effect of squeezing people's finances that much more. It could also very well be then that the UK housing market, which has only just started to feel the effects of prevailing interest rates at that point, may be heading for a collapse over the next few years, which will, of course, have various knock-on effects for things like rental income, which will necessarily have to drop if the value of the property being rented is significantly lower. These are all things to keep in mind about the housing market, whether you already own a house, whether you're thinking about purchasing a house, whether you're renting. Anyway, that's enough for now. Hopefully some good news next time. Thanks for sticking with us.